Hello, guys. Tonight we're diving into something really interesting, Qualcomm's latest earnings report. Now, I've got to tell you, when these numbers first crossed my desk, I had to do a double take. We're seeing record revenues, incredible growth in key segments, and yet the stock dropped about 5%. Let's break down what's really going on here. First off, let's look at these numbers, and they're pretty impressive. Qualcomm just posted $11.7 billion in revenue. That's up 18% from last year. Their earnings per share hit $3.41, beating all expectations. But here's where it gets really interesting. Their automotive segment up 61%, IoT up 36%. These aren't just good numbers. They're showing us exactly where Qualcomm is headed. But wait, you might be thinking, well, if everything's so great, why did the stock drop? Well, here's the thing. It's all about guidance. While Qualcomm crushed this quarter, their outlook for Q2 is a bit more conservative than some investors were hoping for. They're projecting revenues between $10.2 to $11.0 billion, which actually suggests a slight sequential decline. The market, being the market, reacted pretty much exactly as you'd expect, by selling first and asking questions later. Now, let me share something from their earnings presentation that really caught my eye. Qualcomm just announced a huge partnership with Amazon for AI-powered car experiences. They're also powering Samsung's entire Galaxy S25 series globally. And get this, they're launching something called the Snapdragon X platform for more affordable AI-capable PCs. This isn't just a chip company anymore. They're positioning themselves right at the center of where tech is heading. You know what I find fascinating? Qualcomm's actually executing a pretty brilliant strategy here. While everyone's focused on the smartphone slowdown, they're quietly building up these other divisions. Their automotive business just hit its sixth consecutive quarter of record revenues. That's not a fluke, that's a trend. Looking at their client segment, which includes handsets, they brought in $7.57 billion. That's up 13% year over year. Internet of Things segment added another $1.55 billion. But here's what really matters. Their margins are improving. The QCT segment, which is their chip business, hit a 32% operating margin. That's up from 31% last year. Small improvement? Sure. But in this business, every percentage point counts. Let's dive deeper into their AI strategy, because this is where things get really interesting. Their CEO, Cristiano Amon, has been crystal clear about their approach, and it's fascinating. While everyone's chasing the next big AI model or trying to compete with ChatGPT, Qualcomm is taking a completely different route. They're focusing on what I'd call the democratization of AI. The Snapdragon X platform they just announced, it's targeting PCs in the $600 range. Think about that for a second. While other companies are building expensive AI workstations that cost thousands of dollars, Qualcomm is bringing AI capabilities to everyday consumers. That's where the real volume is. That's where the real market opportunity lies. And it's not just about PCs. They're integrating AI capabilities across their entire portfolio. The new partnership with Samsung for the Galaxy S25 series, it's all about bringing AI processing directly to the device. Their collaboration with Amazon for automotive AI experiences, that's about making cars smarter without relying on constant cloud connectivity. This is practical, real-world AI implementation, not just buzzwords and hype. Let's talk about that guidance for a moment, because this is where Wall Street got a bit jittery. They're projecting EPS between $2.70 and $2.90 for next quarter, down from this quarter's $3.41. On the surface, that might look concerning, but here's my take. In this market environment, I actually prefer companies that give conservative guidance they can beat rather than optimistic projections they might miss. And let's not forget, Qualcomm just significantly beat their own guidance for this quarter. Think about it this way. They're guiding for revenues between $10.2 to $11.0 billion next quarter. Yes, that's a sequential decline, but it's still up year over year, and it factors in typical seasonality. Plus, they're maintaining their operating expense guidance at around $2.25 billion, showing strong cost discipline. What really excites me about their future positioning is how well diversified they're becoming. This isn't the Qualcomm of 5 years ago that was almost entirely dependent on smartphone chips. They're now a key player in the edge AI computing with their new Snapdragon platforms, automotive with record revenues for 6 consecutive quarters, Internet of Things, segment with 36% growth year over year, cloud services with their new Qualcomm Aware platform, and they're still dominating in mobile processors. Their partnerships read like a who's who of tech giants: Amazon, Samsung, Microsoft, Hyundai Mobis, and more. These aren't just casual collaborations, they're deep strategic partnerships that could drive growth for years to come. The automotive segment particularly stands out to me. That 61% growth isn't just a random spike, it's the result of years of strategic investment and development. They're not just selling chips, they're providing entire platforms for the future of transportation. So, yes, the stock dropped 4% after earnings. But in my experience, covering tech stocks for over a decade, these kinds of short-term reactions often create interesting opportunities for long-term investors. The market's focusing on next quarter's guidance, but I'm looking at the bigger picture: the AI transformation, the automotive momentum, the IoT expansion, and their improving margins. Is there risk? Absolutely. Competition is fierce, especially in the AI chip space, but Qualcomm has something many competitors don't: a proven track record of executing on major technological transitions, plus a massive patent portfolio that provides both protection and recurring revenue. Remember, though, and I can't stress this enough, this isn't financial advice. Every investor needs to do their own research and consider their own risk tolerance and investment goals. I'm sharing my analysis based on years of covering the semiconductor industry, but markets can be unpredictable, and tech stocks especially can be volatile. That wraps up our deep dive into Qualcomm's earnings and strategy. I'd love to hear your thoughts on their AI strategy and automotive expansion in the comments below. And if you found this analysis helpful, make sure to hit that like button and subscribe for more in-depth tech stock analysis every week here on Stock Sausage.